यशवी रख दो फोन बेटा. Hi guys, good evening. I'm just sharing the link. Okay, I've shared the link. Let me just share the screen. Cool. Let me just open the chat. Hi Arun. Hi Prakash. Hi Bikram. Hi Vasudha. Hi Raghu. Good evening, guys. So today was a roller coaster, an absolute roller coaster. Market turning upside down multiple times, and in the end, ended almost flat. Now, in the after hours, market is reasonably up. It's about 0.6% up. Yes, like I moved on to the June futures. So all the levels we are going to discuss today, anything which we can discuss going forward will be relevant to June futures. And June futures are through in TOS, they're represented by M23. So M is actually a number for June. Hi, Devinder. Hi, Sridhar. Hi, Raghu. Hi, Srini. Hi, Vikas. Good evening. Hi, Vivek. So tomorrow we have a very important economic data, and that data is CPI. Expectation is that we will have some cool off, and as a result of cool off, we may not have a hike going on. Plus, whatever has happened in the past 2-3 days, or maybe let's say last 1 week related to the banks. And because of that, the expectation is that instead of a rate hike, we might see a pivot, and we may expect what you call a rate cut by the Fed pretty soon. So I'm going to talk about all of that based on my understanding, and blatantly anything is possible because these are things which are not controlled in our hands. These are not technical things. These are purely and purely news catalyst, data driven uh, news or events, you want to call them. And there will be some decisions which will be important for Fed to make. So last evening, we did this trader space where I brought in a couple of good experts in what happening in the banking area, and they explained exactly why these banks fail and what are the ramifications of those failures. Now, the failure of those banks have been addressed by Treasury Department and Fed, and they have offered $25 billion as a liquidity infusion in case they want to sell their long-term assets to the Fed instead of selling to the market. So they will get certain period of loan. So I think all of that with respect to the bank issue may be addressed for now. It's not a very durable solution, but for now, it may be a very short-term solution, which will give confidence to these small banks that yes, they are kind of supported by the Fed, and they are not calling it a bailout, but frankly, it's a bailout because you are providing enough liquidity to these banks to cover up for the deposited money. So I really want you to come and join me, share your thoughts, and discuss any contra viewpoints if you have, or any viewpoints in addition to what I have, so that we can make a meaningful conversation, meaningful evaluation of what can be done for tomorrow. Again, I'm not carrying any single position, so I do not have any bias whatsoever. Wherever the market goes, I'm happy to ride that direction. But without any options, without any positions, I have a totally neutral bias going into tomorrow. So I'm not going to do analysis on the stock because that's totally irrelevant. We'll talk about ES and NQ. We'll talk about the possibility of CPI along with what is happening with the bond market and what is happening with the banks. All right. Any questions you have, please put them on the YouTube channel in the chat, or if you want, I can also share the Zoom link so that you can join in and share your opinion. But I don't see anybody coming and joining those calls. So, all right. So let me get started. So let's first see what happened today, especially on the ES. Okay. So let's take about a 15-minute candle. Okay. Now you see, these are candles. These are not high niches. Okay. So this is a difference. Now you will see very important. If I go to the 1-day chart, you will see that this is the long-term regression channel trend line, right? This is what was causing the ES to struggle in the daytime. Okay. Plus there was a good 39.15 resistance. Now, why we were bouncing? We were bouncing because we had a good consolidation in this square box. So anytime we were coming here, we were getting some kind of support. Again, it's simply, if I consider this box as a single candle, this is, I would call a piercing pattern, like half of it should provide some reasonable support. And it did. Yesterday, like Friday, it did that. Today, it did that. And where we went, and let me just clean this. And where we, like in the morning, where we struggled, we exactly hit the 12 EMA. Now, people usually ask me why you use 12 EMA, but by the now, if you see, 12 EMA is much closer. Like 12 EMA is nothing. It's just, I use this because it's the sequence into the Fibonacci, the cleanest one, 1234. It works much better for me. So if you see this green line, this is the 12 EMA. It got tested. We got rejected from here, and we closed right underneath that 39.15 area. Now, 39.15 area is an important 61.8 Fibonacci level. 61.8 Fibonacci level is really, really important level. Okay. So technically, we are at a very important juncture. If we can break above this and hold, I think we have a good potential to hit 4,000. Okay. Now, why would we hit 4,000 and why would not we hit 3,800? I'm going to talk about that now when I'm going to talk about CPI. So this is what happened today. I'm not going to end it now because I wanted to cover CPI first, and through CPI we'll come back and we'll discuss about these tickers. All right. Now let's go to CPI. Let me just. So tomorrow we have CPI numbers. The expectation is 6% year on year. Come on. The expectation is 6%. Last time it was 6.4, and expectation was 6.2. Now, whatever data I have read, whatever reports I have seen, the rentals have gone up. The used car prices have gone up than January. The food inflation is still there. So maybe we may not hit 6%, but we may hit 6.2, 6.3. We may not be above 6.4 like from last time, but we may be near 6.3, 6.2. I do not expect it to come down to 6 because rental, which are the substantial portion of this economic data, it came as a little higher. Now, when we have a little higher, a biggest chunk, then we are struggling. And what is the reason rentals goes up? Because the interest rates were really high. And when the interest rates are really high, the demand for the rental goes up. And when the demand for the rental goes up, they will have the ability to increase the prices. So that's simple economics, is demand and supply. So if I go into Paint and write down scenarios, okay, so let me just draw this scenario. First scenario, CPI greater than 6.0 and between 6.3. My expectation is we will be in this zone. Until last week, when the banking issue came into the picture, Fed were looking to increase 50 basis points. Because the jobs were really high, the inflation is not coming down, the PPI was higher. It's only recently when the wage inflation came down, plus the banking issue has risen up substantially. Now their expectation is that we may not have 50 basis point for sure, but we might have a 25 basis point. Now, I am of the opinion that the use case or the scenario number one will happen, no matter what, because Fed is trying to manage a very tight regime on interest rates, because their main prerogative is to control the inflation. And they also got a backup from Biden. If you see the statement coming from Biden in the last 2 days, he was worried about the depositors and he was not at all concerned about the investors. So anybody who is investing into the stock market or into the option market, he said that they are leveraging a risk and it's the cost of that risk, that we're not going to cover anything for those people. So people who have stocks from SIVB, stocks from SPNY, they're going to suffer. They will have zero value of whatever they have in their portfolios. But depositors who have money in the bank accounts, both insured and uninsured, will be covered properly. So this gives a clear idea to me that yes, Biden is not worried about the stock market. Biden is worried about the depositors, the retail investors. Retail investors or depositors are worried about inflation. So it's a direct relationship. So I think Fed will not stop. Like people were saying that there's a political pressure on Fed not to increase the interest rates. I am sure they were going to increase the rates by 25 basis points. So that's my take for tomorrow. Now, what happens if CPI is in line? If CPI comes in line, then market will like it. This scenario, market will not like it. In this case, if we lose 3,880 or 3,885, that's a zone for ES. If we lose this, we might see support around 3,840, which is today's low on the June futures, and 3,800. This could be the possible support. If we lose 3,800, 3,790, then the next big leg on the downside begins. But right now, 3,800 has provided a substantial support. So I think 3,800 will be a good area for a bounce back. Now, in case CPI comes to be 6, which is completely in line, market will like it. So market will give it a thumbs up. Why market will like it? Because it is less than the previous expectations of 6.4. Previous, it was 6.4. Now, if it comes to 6, that will be really liked by the market. So in this case, we might run towards 3,960. That is the scenario. And market will ignore the fact that, yes, 25 basis points is coming. If CPI is less than 6.0, which is a very less likely case, market will cheer it. That will cross 4,000 in near term. Plus, that will also put pressure on Fed to not do 25 basis points. So it will be a big cross. Let me just change the color just to tell you. So in the first scenario, 25 basis point is a high probability. In second scenario, it's a very low to zero probability. In third scenario, it is 100% zero probability. So my expectation is this is 70% possible tomorrow that we come greater than 6 and 6.3, and then we break down and then find support somewhere here and then try to continue. If CPI comes this side, I'm expecting it to be 20%. It comes in line, 6%. So in this case, we have a probability to go 39.60. And if CPI is less than 6%, which is my take, about 10%, it's like we will not have any rate hike. Nilesh, I don't think so. We are going to have CPI greater than 6.3. If it is greater than 6.3, then we'll even break 3,800 on the downside. Now, if you look at the expectation from all the banks, everybody's expecting 6% and inline. Now, there is also CPI which was released in Indian market. So let me just share you that. Let me just take a screenshot for this in case somebody needs it. Why it is double? Okay. It is double because I have this open. So let me clear this. So just today we had CPI Indian market. CPI data India. Okay. So if you see, CPI has dropped to 6.44, and India is a very big economy. It's not like a small economy, but it in inched lower from 6.5 to 6.4. All right. Expectations was about 6%. So yes, it has definitely cooled off from 6.5 to 6.4, but it is still higher than the expectation. So similar is the setup that we're expecting the inflation to cool off a little. So 6.4, we might come in between 6.2, 6.3, but it will be still higher than the forecast. So that's where I am inclined. That's where I think we will have some like move on the ES. Now, as we discussed all the three scenarios, 6 to 6.3, a high possibility of a 25 basis point hike. Again, market is not anticipating this at all. Market is saying that, yes, there is no rate hike. Instead, there will be actually rate cuts. I do not agree with that at all. The bank situation is one-off situation, which has been addressed by providing enough liquidity. And if there is enough liquidity in the market, for those banks, then they'll be able to deal with it. It's not going to create any panic. But in the longer term, if Fed manages to hold on to rates for the higher period, for the longer period, then it's going to be a substantial issue. But we are not dealing with the longer term. We are dealing with tomorrow, maybe 5 days from now. So I think the expectation will be hit largely by 25 basis points and a higher inflation, because this is going to push. And as I said, Biden has given a thumbs up to the Federal Reserve to manage inflation at a priority as compared to manage the stock market expectation. Yes, Mr. Gulati, they have the same component size. Rentals and housing have the highest ones. And then you go to transportation. And then you have food inflation, energy prices. So all in all, I think we'll be hitting 6.3. All right. So now let's go to ES. Now from an ES point of view, as I said, if we break above 39.15, this has been a very tight area. You see, since we have made an evening star here, and that's what I want to emphasize. Evening star was right here, that we bounced from 39, we went to 47, 40, 70, and then made an evening star. Now with the evening star, we expect two candles of this length. So we had one candle right here, the second candle somewhere here. So all in all, if we do not break below 38.80, 38, like this area, then for now, we will have the low set. Also, you see, we went higher on this uh, negative trend, but the strength of that trend was not substantial. So in this case, it is possible we might bounce. Okay, so we need to keep this in mind, that even if the negative strength or the negative momentum is high, there is not much strength in that negative momentum. All right, so I'll be very cautious. Plus, we have tested the 12 EMA, so it's an important aspect. Next time we tested here, we tested here. So next time we test it, this will be tested like multiple times. So there's a possibility we break it and we go towards 4,000 area. Also, if you look at the price action, this price action tells me that yes, we are trying to hold the price within a tight range. Bobcat, the strength line is the black line. The red and green are positive and negative momentum. The green is the positive momentum and the red is the negative momentum. So if we have, like, in case we had the black line like this, I would have worried. But right now the black line is well below. So in this case, the strength of this negative momentum, if you see, it's 19. Usually if it is about 25, 30, I am like little concerned. Right now it's 19, so not much to worry about. All right, so next one is NQ. So if we talk about levels, right, let me just write down the levels. If we break 39.15 on the higher side, right, if we break 39.15, that's the Fibonacci level. So that's the first tick. Second thing, we'll break the regression trend line. That's the second tick. Third tick, the bottom is in place. Because if we are moving higher, then we are not testing the bottom. So the low is in place for now. We can hit 39.60, 4,001. That's in case if we cross 39.50. So 39.60 will be one area. Second area will be 4,000. In case we break below 38.80, possibility of 38.40 and 3,800. And we might find good support at 3,800. Why? Because we have found enough support at 3,800 in the past. So 3,800 is an important. So if we lose 3,800, then only I will be saying, yes, the next leg of down cycle has begun. And today, if you see the tech stocks, especially Amazon, Apple, Microsoft, they were really strong. And if these stocks are strong, right, even in the negative market, they brought the NASDAQ into green and almost 2% high. If these stocks are strong, how and why would market go down? Because they have substantial size into the S&P and into the NASDAQ. So let me just give you that system visualization. So if you look at NASDAQ, right, if you have Microsoft, Apple, Amazon, Tesla, Meta, Google, Nvidia, all these stocks showing good green, how can you expect the NASDAQ to go down? And if you go to S&P, again, these are the big stocks. All the banking sector and the financials is this much, which is equivalent to Microsoft roughly. So all the negativity from all the financials can be easily offset by Apple and Microsoft. So if you see strength in Microsoft and Apple, do not try to fight the trend, right? They will provide momentum, and the issue of the banking may persist, but I think we will have some cool off tomorrow. Whatever we had, it was a panic which was created by so much of news, so much of not understanding what are the impacts of these issues. With Fed backing up these banks, I think there will be some relief in these banks. Again, it's a short-term situation. In the longer term, yes, the situation is still critical. So coming back to the ES levels. So ES, as I said, has the possibility to go up and down both sides. My take is if we break 13 and 15, we'll have thumbs up, we'll go up. Again, it needs to be in conjunction with the CPI print, which will come at 8:30 tomorrow. All right, now coming to NQ. And guys, let me share the Zoom link. If anybody is interested to have a conversation or anybody is interested to share their thoughts, you're more than welcome to join in. I have shared the Zoom link. If you're interested, please join and share your opinions. Or let me go back now. So I've shared the Zoom link one more time. Now let's go to NQ. Now NQ, if you see, NQ is roughly an inside day. And the important aspect of NQ is managing to hold that 38.2 Fibonacci level. Now, when you're holding 38.2 Fibonacci level on the closing basis, we had a good down move, but what we did a higher high. We had a high, which is higher than like Friday's. We had a low, which is higher than Friday's low. So this sets up the good positive flag. Now, once we cross the 12 EMA, you will see, even on my chart, you will see the black arrow coming into the picture. Why black arrow will come? Black arrow will come because now I have crossed the 12 EMA. And what is the 12 EMA on the daily basis? 12 EMA is 12,126. So once we cross 12,126, it is going to come. And it's kind of a bull flag for me. Okay. So I really think if we have to go higher, NASDAQ will be the leader here. So if you want to go long, try stocks like Amazon, which had substantial strength today from 88 to 94. I even recommended that in my Telegram channel, where we entered into 91 calls at 2 and exited around 280. They went on to make 380, but I'm following a very tight, disciplined trading these days. So soon I got my target, I was out. But they are showing some substantial strength. Okay. Now, if 12,000 is held, 12,600 is likely. We may or may not hit 4,000, but if 12,000 is held, 12,600 is most likely a very probable target on NQ. If you go to QQQ, I think it will be 306. If we break above 290, possible of 299, and 306 is really high. All right. So keep an eye on triple Q. I don't expect triple Q to go down below 12,500 or here 284, 285. It's an extremely good positive support for triple Q. All right. So all in all, I'm positive on triple Q. I am flat to positive on ES. But again, it all depends on CPI. If CPI comes as I expect 6.0, I would love to add into NQ at a dip, and that dip will come to 286, 287. If it comes, I'll be a buyer at that dip. If NQ or CPI comes in line, NQ will be the first one to run and can hit 294, 95, 99, 306 in straight line without any struggle. All right, guys. So I'm pretty much done. If you have any questions, let me know. Let me read your questions. Abhinav, any thoughts on XLF? XLF is a banking ETF. Uh, see, it's at an important, like we had inverted head and shoulders. We are well away. We are kind of seriously oversold at this time. The momentum, if you see, let me add one more thing here. Let me add volume profile. But I do not have more details on. So if you see volume profile here, in this case, we almost hit this area. Okay. And we can go higher because there's a gap right here. That volume shelf, this volume shelf is really low. So if we have to bounce, and there is a gap right here as well. So if we can find a support and cross 32, right? This has moved really high. So it's kind of an oversold territory. The momentum is still not about 25. So most likely it will come down. The black line will go flatter and the green line will try to go higher from here. I'm not going to short XLF here. I think there's a possible bounce towards 33, 34 area. Bonds, I was looking at the 10-year on the 2-year yield right here in the bond market, the 10-year yield, and let me open the 10-year yield. So 10-year yield, if you look at this one, right? And this is 10-year yield. Okay, let me just clean this. And if you break this into 15 minutes, right? Or let's say 30 minutes, just more. This is setting up a bull flag. We went down because there was a news, there was a confirmation, not a confirmation, a conclusion from Goldman Sachs that we are not expecting rates to go higher. And rates are not going higher, that's a negative for the yields. So when the yield got that news, they cooled off substantially, almost like 370 all the way it came down here. Now, if you all the way from 410, they came just right there. Now, are we in a bottoming pattern? Yes, because here we had struggled. So we have kind of testing the base one more time. So in this case, there's a high possibility we might, again, if CPI prints come to be higher, as I said, 3,800 is on card. So bond yields will go higher. Roblox, I was positive since last 2 days. I posted that on my channel. I expect 44, 45, but again, it depends on the market. Again, guys, I'm not doing the ticker analysis today. So please be mindful of that, because even if whatever I mention, it may not become relevant in tomorrow's market. Tomorrow's market is more inclined towards the CPI data. And based on the CPI data, we need to understand where will be the direction of the market. So any other questions anybody have, I'll be more than happy. Anybody who joined the Zoom call, I have two gentlemen, Sharad and Zoom user. You have any questions, guys? No questions here. So, yes, go ahead, Zoom.
Hey, Naval, Sridhar here.
Hi, Sridhar.
Yeah. The last CPI, when it came in, even though it was a little higher side, the market didn't even think about what is going on. And also, we discussed about how much it is going to be the further rate increases. We were talking about two more,
And
25 points, all those
uh,
things.
just to counter you here, the market did react and the market reacted badly. It was just that deflation sentiment, which was propagated during the press conference from Powell, took over that the CPI came higher. So deflation, 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 and we went up. But soon after that call, everything started to decline. And now we have almost cooled off 350 points from 40, 200 area. So I would not say, yes, it was not an immediate impact, but yes, there was an impact. Yeah, go ahead. You could mute, unmute.
Yeah. How about the further rate increases? Is it this bank?
Sorry, you got muted. Yeah, go ahead.
Yeah, Naval. Can you hear
Yes,
me?
I can hear you.
Okay. How about the further rate
I
increases?
expect
Is it
25
going to
basis
be
point at least 2 more times.
okay?
I do
Makes sense.
expect that. And that's like the thing which I copied here. I expect 25 basis points if CPI comes in 6 to 6.3.
Thank you.
No problems. Anyone else has any questions?
I mean, do you think if we're done with the FRB and all declaring another bank that fails, or
I think we are pretty much done, yes.
Yeah.
Because the problem like they were struggling with was that they had long-term securities. And those securities are supposed to mature in 10, 20, 30 years. All right. Now, as a result of the high interest rates, bank have to pay the depositors a kind of interest. Now, when the bank tried to sell these securities, there were no buyers. So you would see that they were like proposals coming from multiple banks to give them 70 cents on a dollar or 60 cents on a dollar. So that market for the bond market was totally illiquid. Now, what Treasury Department did was that Treasury Department has provided them liquidity and said, we're going to buy your long-term securities because we know there's going to be return on those securities. So you take them as collateral to us and we'll give you the loan. And that loan will provide you enough money to take care of your depositors. Since then, the shorters or short sellers in the market have tried to bring these stocks down, and there was substantial push on the downside. But I think for now that problem is addressed. Maybe it comes back and haunt us with a bigger impact, but for now it is addressed.
Thank you.
Then after any, I don't see any cuts at all, unless things get really, really bad in the US market, especially in the banking sector. Otherwise, I don't see any cuts because inflation is still elephant in the room. Banking sector, we still have the bigger banks who can manage these investments, deposits. But if you look at inflation, inflation is not going to cut down at the higher bank or higher deposit. Inflation hits the weakest section in the society. So inflation is the most important thing which Fed will have to take care of. And Biden and his administration came out pretty quickly and addressed the need of the bank by providing them a provision of a loan. It's in their terms, it's not a bailout, but for me, it's a bailout because they're providing them liquidity and granting them loan on like a minuscule percentage. So Rajiv Arora, I am not a long-term investor or a person who believes in long-term investments, because you don't know what's going to happen. The only long-term investment is your index. If you want to buy index and add, that's something you can take. 10 years down the line, index will be like, ES might be 15,000 from here. So there's a high possibility of getting double or triple. I don't know about the stocks. I don't know, like if we have a big event like we had COVID, where stocks got butchered. So what you can do with your investments, no idea. So I do not believe in long-term investments. Anyways, guys, anyone else? Otherwise, I'm pretty much done. I'm going to close this session, and I'll see you tomorrow. And guys, if you have uh, not joined my Telegram community, the link is available on Twitter. It's a public community. You can come and you can share your thoughts. You can share your charts, and we can discuss and review those charts during the market. All right. Have a good
Thank
night.
you.
Bye-bye. Take
Bye.
care.
Yeah, bye.